I'll turn to the others. Paul? Thanks.
Part of what makes humans so special and makes our future so optimistic is that we have the potential of sharing ideas with each other. One way we capture this is with a saying you probably know, that if you give someone a fish, you feed them for a day, but if you teach someone to fish, you destroy another aquatic ecosystem. Now, if you remember anything from my talk, remember that line, because what it tells you is that progress is driven by both new technologies like nets and trawlers that let us fish more efficiently, but also by rules that structure how we interact with each other and what we do. And if the rules don't keep up with the technologies, we get bad outcomes. This was really what George Yao was talking about yesterday in terms of the crises that come from systems of rules that tend to be stable and don't keep up with a world where technology and social life is evolving very quickly. You can see that in the richest countries in an area like financial regulation, where regulators have to figure out what to do with high-frequency trading. Hundreds of thousands of offers and bids and asks submitted in milliseconds. This is not something they had to have rules about 50 years ago, but now they need to. But it's really a much more important question for the developing world. To give you some sense of the magnitude here, well, first let me give you an example in the developing world of where rules aren't keeping up. They came up in this morning's discussion about India. India typically has rules about pricing of electricity that don't allow full cost recovery, and this significantly impedes the expansion of reliable electrical power, which is a technology which has been around for 100 years, but still hasn't been widely diffused because some set of rules in India holds it back. Now, what's at stake with those kinds of rules? The estimates are that if we could push forward the global agenda on trade in goods and services and investment and reduce all trade barriers, all remaining trade barriers to zero, that could lead to an improvement of worldwide GDP of several percentage points, 2, 3, 4, 5% of GDP. If you ask a different question, which is you let everybody in the world move from systems of rules that are constraining and holding them back to places where the rules let their full potential be realized, the impact would be to double worldwide GDP. So a 100% improvement in GDP. And you can estimate this by looking at what happens when an Indian worker, a Chinese worker, a Nigerian worker moves to a place that has better rules that give you access to simple things like electricity and manufacturing. So what's at stake in reform of rules that are holding us back in the developing world is just absolutely enormous. So my interest in cities comes from urbanization as a strategy for reform of bad systems of rules. So imagine in India the comparison between implementing the kinds of mechanisms that people have tried for many years to use to change the rules about electricity pricing through the political system, and then contrast that with a Shenzhen kind of strategy. Suppose the government of India could identify a piece of land about the size of Shenzhen and just say, okay, an empty piece of land. In this place, we will start right from the beginning with efficient rules so that you can have reliable power, that it's provided by a private firm that earns a return on its investment, so on and so forth. It's not very hard to persuade yourself that that Shenzhen strategy could be a useful complement to all of the other strategies of reform which are already ongoing. A demonstrated success like Shenzhen, where you implement very different systems of rules, people voluntarily opt into those rules, so there's no opposition from some set of incumbents. And when those rules produce value, which is much greater than what you get in under the status quo, the benefits of those rules themselves start to be copied and migrate through the rest of the economy. So new startup jurisdictions may be the best way for us to make rapid moves forward in the efficiency of the rules that we use to organize ourselves. Now, think about using a Shenzhen to, say, deal with corruption in Greece or Italy. Suppose you started an entirely new city in one of those countries and had a completely different system of law enforcement. You copy just wholesale the Independent Commission Against Corruption here in Hong Kong and transplant it into the new city, and then let people opt into this kind of new city. And don't laugh. You guys may see the disadvantages of it, but go spend time in Greece and Italy, and it works. And it's much better than the alternative. The problem with trying to execute this strategy in Italy and Greece is that these are almost fully urbanized places. To get new people to move into a new city, you basically have to pull people out of existing cities, and that would come at a higher social cost, and would be harder to have it succeed. But we have this opportunity right now in the developing world. There is just this immense supply of people who would love to be able to move to a well-run city right now. So if you could build new cities with better rules, people would flock to them. I'll quote some other statistics that are like the statistics Dr. Hai presented, but for the world as a whole. Right now, the world still has about 36% of labor devoted to agriculture, but it produces only 6% of worldwide GDP. So there is this enormous transformation which is coming as agriculture modernizes throughout the world, and people are freed up from this dangerous, grinding lifestyle of subsistence agriculture to move into the kinds of opportunities that are available in manufacturing and services in urban areas. So we have an enormous amount of urbanization, more than we can really comprehend. There's about 3.3 billion people who live in urban areas right now. It took us ever since the Neolithic Revolution, so 12,000 years, to get to 3.2 billion. We're going to get to 6, 7, 8 billion people in cities by the end of this century. So more than double in this century, or do more in this century than we did in the last 12,000 years. So in many ways, it's a challenge that scares us, but we should really see it as this opportunity to devote some of that urbanization to the creation of entirely new jurisdictions, as opposed to having it all go into the expansion of existing jurisdictions where you reinforce the existing rules there. Now, there's a remarkable coincidence, because this is not only a time where there are billions of people who want to move into cities, it's also a time where the most serious macroeconomic challenge that we face, that underlies much of what Mike was talking about last night, is a dearth of investment opportunity. Worldwide, savings rates have gone up. It's an identity that we cannot escape from, that savings equals investment. If there aren't investment opportunities, a higher savings rate is going to translate into lower income, and there's simply no way around this. Now, how can it be that we feel like there's a dearth of investment opportunity when 3 to 5 billion people want to move into cities? I mean, we know that this is going to take trillions of dollars of infrastructure investment. And then if you step way back and think about a brand new city as a real estate development, it doesn't take any charity to do a real estate development. You put all of the investment into building an entirely new city, the public investment, what we used to think of as public investment. We think of the roads, the power system, the water system, electricity, and then you think about policing as well, the things that the government, public health, the thing that the government has to do. If you put in all of the expenditure to do all of those things, put in the expenditure for the buildings, the city as a whole is still going to be much more valuable than it costs to build and operate. Mm-hmm. This is the amazing thing about cities and human cooperation. We create enormous value when we can work together in well-structured systems of rules. So the opportunity here is to create jurisdictions which start out with good rules that attract people into them, attract employers. But here's the really difficult part. It's also got to attract the private investment in infrastructure. And the system of rules that can protect infrastructure investors who put something in the ground and can't ever take it away with them, and who are expecting to get returns on that for decades. Creating a system of rules that can support that kind of direct foreign investment in infrastructure is difficult. We know we've done it in the past before. Britain financed an enormous amount of infrastructure investment throughout the Anglosphere and even parts of Latin America in the earlier stages of development. So we know that it's possible to have direct foreign investment in infrastructure. But at the moment, we're lacking jurisdictions which facilitate that, which can attract people and can attract employment. But if we are creative about this and think about the example of Shenzhen, think about the example back earlier in history of the concessions around Shanghai, where these new cities and new rules involve some foreign participation, or even the example of Hong Kong, then we should be able to think much more broadly about what would it take to create a Shenzhen in India, or a Shenzhen or a Hong Kong in India, or a Shenzhen in Brazil, or a Hong Kong in Honduras. I'm past my time, but there is a Hong Kong we're working on in Honduras, and ask me about it in the question and answer period.
Thank you, Paul. Very good. I'm going to turn now to an actual resident of Italy, Mike Spence, to talk about cities and urbanization and follow up on Paul's very interesting take on how urbanization can really lead to a new set of rules for development.
Yeah, I think Paul's work in this is really quite important and innovative. I think it has two essential components. One is, well, maybe three. One is that rules really matter. People put this in different ways. Sometimes I think that it's tied up with a question of institutions as well. The second insight, which is not new, but he's brought it to life, is that there is a complex set of, a balancing act that involves sort of cooperation and competition. And the insight is that there is competition in public management. There's competition among states, for economic activity in many countries or provinces or whatever they're called. And as long as it's constrained in the right way, and this is, of course, both the science and the art, is trying to figure out, I think this is where Paul's work is really moving the frontier, is what have we learned? What are those constraints? We know that if competition among municipalities or regions takes the form of blocking trade, that's a bad form, right? On the other hand, certain kinds of flexibility with respect to taxation doesn't seem to be a particularly destructive form. So, I'm not going to go on about this, because Paul has really, I think, changed my thinking in an enormous amount about this, and I think it's unconventional, but it's a very promising sort of idea that's consistent with a lot of other things. Let me go back. When we were doing the Growth Commission work, I didn't know this until we got into it, but it's clear that urbanization, I'm going to modify something that Shekhar said, it is both a driver of growth because it generates investment opportunities, employment, and whatnot. It's also an enabler, right? I mean, this process has to work it's always a little bit chaotic, but it has to work. And it has to work in parallel because the economic activity, the modern economy that's being built is built in urban environments. Now let's make it change somewhat at the margin by technology and other things, but fundamentally we have not gotten around the fact that the most sophisticated parts of modern economic activity require proximity, or what my friend at Stanford, the former dean of the engineering school, in talking about Silicon Valley, said this is a body contact sport. You cannot run Silicon Valley virtually, right? So that's right. And I think, so then you get the challenges that Isher talked about, and I don't want to repeat what other people have said. I will say something about the Chinese case. In talking with the people in China about the rather significant reluctance to give up completely the registration system, there was a tremendous fear about Brazilian-style urbanization. You know, where, I mean, a crude, and forgive me, but we don't have a lot of time, description of that is that in much of Latin America, there's an enormously concentrated ownership of assets, including land. That meant that, you know, land consolidation and efficiency occurred at whatever pace those people decided they wanted to do it at. And so urbanization in Brazil, for example, occurred not because people were moving to jobs, attractive jobs, say young people moving into attractive jobs, but because the jobs disappeared in the rural area. And so it was, I mean, I guess in the language of market, it was push rather than pull. And so you ended up with people sort of living on hillsides that in Buenos Aires and other places that in things that came to be called favelas. And I think that's a reasonable concern. So if you think about that, the lesson I think that comes out of this that is kind of my add-on to what's already been said is to make this really work, the employment engines have to be running. And so that there's a healthy choice, you know, that's made by various different people in different age groups and skill categories about when to move and where. There's a related issue that I don't know the answer to, but is much talked about, which is what's a reasonable size distribution of cities, size distribution and location, and does, or under what circumstances does the market system and free choice need to produce the right result somehow? I think what the urban economists who have talked to all of us say is if the land system works well, if the governance is reasonably decent, if the financing things are all in place, then there's a reasonably good chance that you'll get market forces and natural incentives giving you the right answer to that. However, since none of those conditions are in place on the way through, you know, I think there is a legitimate concern that you'll end up with mega cities that are way too big and a dearth of medium-sized cities because and there's all kinds of reasons that could happen. I mean, there's clear asymmetry still in China with respect to the sort of, you know, revenue sharing funding of urban things. The last thing I'll say is, you know, wearing my institute hat, we are very interested in cities because of its link to sustainability. So let me just use a little small amount of remaining time to me to talk about that. I was just talking to a good friend of mine, Kurt Lauk, who's here as a German, and he just insulated his house, the roof. And it's not a gigantic house, but and it cost, he said, 60,000 euros. And I kind of gulp, you know, having just said this morning that I think, you know, sort of more energy efficient houses is one of the great big opportunities in terms of leverage. But then it became clear to me that and he said, you know, this is hopeless. I mean, in Germany, you know, we turn over the residential housing stock at the rate of 1% a year. So it will take forever to get this done, and if it's too expensive, I mean, I don't know what the payback period on that 60,000 euros is, probably 2 or 3 centuries, but but the calculation, the rate of return calculation is entirely different if you're building new structures, right? Retrofitting is just way too expensive. Now, I don't pretend I know all the data, but there's a fair amount that suggests that this is a very large lever. So our interest is in trying to understand in much greater detail than at least I do now, is if we're going to build all these new cities, and it's at least one of the most important opportunities to make progress on energy efficiency, sustainability, and other things, then how do we design them? What process do we use them to design? Do we have the right incentives in place? Let me give you one other example. I've talked to developers in the United States and asked, do you build, you know, well-insulated, relatively energy-efficient houses. And they say, well, we sort of try to, but you know what? It costs a little bit more, and the people who are buying it don't know the difference. So they don't pay for it. So competition tends to beat it out. So you go around in a circle and you ask yourself the question, well, I mean, that's just plain informational asymmetries, right? I mean, you'd solve that problem if you had a bunch of people who knew what they were doing when they were buying the thing. I tell you these stories because I think the devil is in the details. We're going to have a big opportunity, but we're going to have to sit and think carefully about all these pieces that have to come into place. I have been told, the McKinsey Global Institute study on the resource revolution has some pretty interesting data. One of the things that surprised me is that urban densification was not one of the levers that had the highest rate of return relative to cost. I would have thought the opposite. I mean, I would have thought that if you wanted to blow it, to put it crudely, on sustainability, then you'd build a bunch of Los Angeleses. In terms of livability and lots of other things, we need to do some more homework on that, but the general point I think remains. Urbanization and doing it properly and finding out what incentive structures and regulations and rules, to go back to what Paul said, I think is certainly on a very short list of the main opportunities to get this right. And it fits the description Shekhar gave a minute ago, which is that you can leapfrog. You don't have to build landlines. You can use cell phones. Much less capital intensive, revolutionized access to information and finance and other things, or is in process. You don't have to build the wrong structures and face the retrofitting problem. And so I'll end with this. That's why I think there should be way more urgency than there is now on getting pricing right. The developing countries are uniformly subsidizers of energy. This is a catastrophic forward-looking set of policies. And the answer that you get back is reasonable from policymakers and political people, which is they say, it's very hard to get out of this. You raise these prices, and there's a bunch of people, including the poorer parts of the population, that are going to be in trouble. My answer to that is, yes, that's true, but there are other ways to protect the poor people than holding prices down. Now, you can't do it overnight because you can't build the alternative mechanisms and make them work. But just not getting on with that, means you're going to create catastrophic incentives. You will build the wrong structures. You will bias the structural evolution of the economy in the wrong directions. You will do this. You will do many, many things that turn out to be a mistake. And so I just wanted to put that on the agenda. I think if the Institute and or the folks we deal with, can sort of add to the sense of urgency about getting this right. It's really important. I mean, the United States subsidized a solar panel company called Solyndra that went broke. Well, part of the problem is that, we have ridiculously low fossil fuel prices in the United States. So we haven't created an environment in which, carbon's priced, the real benefits of a completely carbon-free technology. All right, this isn't when my friend Kurt Love described. He just spent 3 days in the Department of Energy in America, and I said, "What did you find?" And he said, "The policies are completely incoherent," which means. And so this is my last point. Getting this right is not picking things off one by one. It's figuring out what the whole configuration of prices and policies and incentives have to look like, and then sort of going after getting that done. And I think it's going to be hard work, but we'll get there eventually.
I was, when I first saw the program, I was struck by why the choice of urbanization. And listening to all the four panelists so far, but particularly Paul and Mike. It's really an amazing opportunity that we are faced with on rules, on technology, on sustainability, on jobs. I think we probably don't have one other sector that brings all these opportunities together. So with that, let me turn to Xiaogong on possibly the Institute's own view and vision for this line of work and the work particularly in the context of India-China, but also more broadly.
Yeah, thank you. Well, I think as you all know, we have 4 projects, and this is urbanization project really is integrating each of the projects. And I actually will give you an example, by looking at this issue from more finance perspective. As you know, when I first came to Hong Kong 20 years ago, I was told by Hong Kong University that I can afford to live in a 3-bedroom apartment. And my wife and my young, just born kids come to Hong Kong and then walk into the apartment. I mean, it's 600 square feet. And, coming from Washington, D.C., I was surprised. But later realized that the price, the property price in Hong Kong is very high. But that's largely due to productivity. All the productivity is really driving the urbanization, So the question for China is that when China is urbanizing, what really happens is a reduction of transaction costs, catch up in technology. So all those leads to very efficient cities. If you go to Beijing, Shanghai, you take the airport, subway, high-rise, hotel, you can see the efficiency is catching up with Hong Kong, So that's the reason which is driving the property price, But I would say that there's a serious trouble. What is it? It's what I told my students, 20 years ago I came to Hong Kong, I told them that there's 2 things that's going to happen to your life. One is inflation in China. The other is the appreciation of RMB, So if you can catch that opportunity, you will become very rich. And that's exactly what happened. It's really the appreciation of the assets, the so-called non-tradable, the assets, So that because of the productivity, in the tradable sector in the cities, then the non-tradable, the properties, and also the wages for unskilled laborers, they actually catch up very fast. That leads to what I call structural inflation. Inflation is a healthy inflation, but if you are not careful, you are going to be in serious trouble. Like in China in the last 10 years. They were inflation in China, but actually less than in India. But the problem is that the interest rate, the price of capital, if it's not compatible with the productivity gain and the appreciation of the asset value, then you get what I call the negative real interest rate. It's like if you go to China, you get the mortgage loan, it's only 5-6%. But if you buy property, wow, the return is 10%, 50%, sometimes 100%. So in the last 20 years, whoever bought property in China got rich. But who cannot buy property? It's the migrant worker, retirement, people, they put money in the bank. They have net deposit in the bank because they have no mortgage. They cannot afford, right? So those people are actually subsidizing the people who invest in property. And the people who invest in property are richest in China. So the system of this distorted price of capital is actually making the poor people poorer and rich people richer. So that is the distortion in the financial sector. The low interest rate, is actually the major challenges, I think, for China going forward, in this very fast urbanization phase, and that shows the relationship between the financial sector and the urban, sector. So I will stop here.
Thank you very much, Shah. So what I'm going to do is open it up, and perhaps with the indulgence of the audience, since we started a bit late, I'm going to push this a bit into the lunch hour, but we'll come to that in about 15, 20 minutes. So I'm going to start taking questions, and please be very short, no comments if you can help them, just a question. I'll start from the front here with Andrew.
Well, thank you. Thank you. I mean, China's urbanization is really, process now is really without historic precedent.